In March 2026, the Pennsylvania Treasury began printing and shipping over 100,000 checks to residents across the state. These payments, totaling nearly $23 million, are arriving in mailboxes in amounts up to $500. Pennsylvania is one of several states currently issuing these payouts. Residents in Illinois, Indiana, California, and Georgia are seeing similar unprompted payments hit their bank accounts and physical mailboxes this year. Receiving an unsolicited check from the government often triggers a scam alarm. Historically, accessing state funds has required navigating immense bureaucratic friction, including long phone trees and stacks of paperwork. However, these 2026 checks are entirely legitimate. In the states where they are appearing, local governments are moving away from reactive, claim-based systems and using automated data to distribute money directly. Determining if you are eligible for one of these checks requires looking at the specific legislation in your area. This is not a single national mandate. These payouts come from 3 distinct policy models operating at the same time. The first model involves state treasuries returning what they call unclaimed property. These are physical and financial assets that states hold in custody when the original owner can't be found. This property often consists of dormant bank accounts, uncashed paychecks, and forgotten rebates. The scale is massive. Pennsylvania alone currently holds $5 billion in its unclaimed property vault. Previously, the burden was on the citizen to search outdated databases, identify a missing asset, and file a complex claim with supporting documentation to prove ownership. In 2026, states like Pennsylvania, Illinois, and Mississippi implemented Money Match software. It cross-references tax records with property logs to find owners. When automatically verified, the state simply mails a check, applying to properties up to $500 in Pennsylvania. This Money Match system uses existing government data to return assets directly to citizens, removing the traditional requirement for manual claims. The second model is guaranteed income, which targets specific, vulnerable populations with direct cash assistance. Cook County, Illinois, is a primary example of this approach. Guaranteed income provides recurring, unconditional cash payments. These funds are designed to prevent evictions and provide financial stability for low-income households without spending restrictions or work requirements. Many of these programs began as temporary pandemic-era pilots. In 2026, several local governments are now transitioning these initiatives into permanent parts of their budgets. Cook County recently allocated $7.5 million to provide $500 monthly to 3,250 households. In Indiana, Indianapolis launched a $2.5 million program to support 125 renter households facing a high risk of eviction. While unclaimed property returns are available to anyone with a lost asset, guaranteed income functions as a targeted tool used by cities to address localized poverty and housing insecurity. The third model is the surplus tax refund, a policy often triggered by state-level revenue growth. When a state collects significantly more tax revenue than its budget requires, some state laws mandate that the excess funds be returned to taxpayers. In March 2026, Georgia enacted HB 1000, using its budget surplus to issue refunds between $250 and $500. These checks are sent automatically to residents who filed taxes in both 2024 and 2025. These surplus refunds act as economic demands for taxpayers, providing a direct financial return based on the state's fiscal performance. The programs in states like Pennsylvania, Illinois, and Georgia represent a shift toward more proactive, data-driven models for distributing cash to citizens. Eligibility depends on which program your state adopted. Guaranteed income and surplus refunds are tied to strict geographic, income, or tax filing thresholds. However, the Money Match model has a much broader reach. In active states, 1 in 10 residents is owed unclaimed property. These automated systems have specific limits. In Pennsylvania, the 45-day mailing window is currently active, but the automation only applies to properties under $500. Larger or more complex claims still require a manual filing process. You don't have to wait for a check to arrive in the mail. By searching your state's Treasury website or a national unclaimed property database, you can identify and claim these assets directly.